The UK's pound sterling is in a precarious position, caught between inflation and recession. Economic uncertainty has caused the value of the pound to plummet, and it is now worth less than it was before the Brexit vote. The Bank of England has raised interest rates in an attempt to control inflation, but this has only served to further weaken the pound. The UK's tax cuts and approaching recession are further putting pressure on the currency. Newly elected UK Prime Minister Liz Truss talked about her proposed bold plans to stimulate the economy with a tax cut, but the question now is, will it help the pressure on the gasping currency? The economy is slowing down, and this is also putting pressure on the pound. GDP growth is expected to slow in the second half of this year, which will likely weigh on the currency. All of these factors are putting pressure on the pound, and it is struggling to stay afloat. The currency is under pressure, and it remains to be seen how long it can hold out. Welcome to Savvy Economists. In this video, we will discuss how the pound sterling is being affected by the rising inflation rate, tax cuts, and impending recession. Don't forget to please watch, like, and share this video if you enjoy it. Also, leave your comments and thoughts below, and don't forget to subscribe to the channel for more related content similar to this. A Wednesday post from CNBC talked about the British pound experiencing a plummet to its lowest level against the US dollar. The report stated that the pounds dropped to $1.1444 in the early hours of the newly elected British Prime Minister's triumph on September 5th. During an afternoon trade in London on Wednesday, September 6th, the pound sterling was said to have dropped to $1.1407, and such a situation has never been experienced in the last 37 years. The lowest the pound sterling has ever reached against the US dollar occurred on February 26, 1985, to which pounds fell to $1.052, according to CNBC reports. The rising inflation rate is eroding the value of the pound sterling, as it is now worth less in terms of purchasing power. Inflation has been rising steadily in recent months. According to Pew Research Center analysis, over the past few years, inflation rates doubled in 37 of 44 advanced economies. A recent post from Trading Economics revealed that in July 2022, the annual inflation rate in the UK from a previous 9.4% to 10.1%. The rising rate is causing the pound sterling to gasp for air. It is making imports more expensive, which is going to put upward pressure on the country's price level. As the pound loses its purchasing power, investors become less attracted to the currency. Every investor wants to hold assets that are likely to appreciate in value. Assets that are expected to depreciate in value are less attractive. If investors feel that a currency is likely to fall in value, they are going to sell it. Well, we all know a recession is a bad news for any economy. It is a sign that an economy is contracting, and the GDP growth is weaker than it was before. It is also a sign that an economy's growth is slowing down. If the economy is contracting, investors are going to be less likely to hold assets that are linked to that economy. Assets linked to a contracting economy are more likely to decline in value. Investors are going to be less likely to hold assets linked to the UK economy if it is in a recession. A decline in investment in the economy will cause more damage to the country. The impending recession is likely to also have a significant impact on the pound sterling. The UK economy is highly dependent on exports, and a recession in the UK would likely lead to a sharp decline in exports. This would put downward pressure on the pound sterling as businesses and investors seek to sell their pound-denominated assets. Additionally, an imminent recession would likely lead to an increase in government borrowing, which would also put downward pressure on the currency. An August post by Bloomberg claims that even with the new Prime Minister's aggressive tax-cutting agenda, the UK economy is still much likely heading for a recession based on Bank of England projections. The UK government has promised to implement a tax cut for its citizens. This tax cut is likely to come at the cost of the country's fiscal deficit. The government may have to borrow more money in order to fund the tax cut. Investors may start to become more concerned about the country's fiscal health. A growing fiscal deficit tends to boost a sluggish economy and provide more money for people to buy and invest more. However, if the fiscal deficit is long-term, it can be dangerous to a country's economy. It will also make it more difficult for the government to pay off its existing debt. This will put further downward pressure on the pound. Risk of a pound sterling crisis. With the current decline in the value of pounds in recent months, a risk of a pound sterling crisis in the near future is imminent. This is also causing concern among economists and financial experts, as they believe that a further decline in the pound value could lead to a crisis. The pound has been under pressure due to a number of factors, including the Brexit vote, which has caused uncertainty about the UK's economic future. Additionally, the UK's current account deficit is one of the largest in the developed world, and this is putting further downward pressure on the currency. The risk of a pound sterling crisis is increasing as the value of the currency continues to fall. According to a May post from The Guardian, experts warned that sharp losses in the pound sterling could result in an increase in import cost and invite attacks on the currency. This would be disastrous for the economy and could lead to a recession. Therefore, it is essential that the government takes action to stabilize the pound and avoid a crisis. As the pound sterling continues to drop in value, it's important to take steps to protect your money. Here are a few tips. Keep your money in a safe place. This may seem obvious, but it's important to make sure that your money is kept in a safe place where it is not likely to be stolen or lost. Consider investing in a foreign currency. If you are worried about the drop in value of the pound sterling, you may want to consider investing in a foreign currency. This way, you will be able to protect your money from the fluctuating exchange rate. Make sure to diversify your investments. Don't put all of your eggs in one basket. This is good advice in general, but it is especially important when it comes to investing in a volatile market like the foreign exchange market. Be careful about spending money on travel or other activities that could be affected by the exchange rate. By following these tips, you will be able to protect your money from the drop in value of the pound sterling. The long-term outlook for the pound is uncertain, and it is possible that it could lose even more value in the months and years to come. Thank you for watching. See you next time. Don't forget to like and subscribe to this channel for more educational videos.